Hello, this is Brian Kasal with the FourStar Wealth Advisors commentary for November. October was all about volatility. As the economic numbers started coming out, we had reasonably good numbers in most of the companies. The GDP number has come out to be very positive for the third quarter, yet the market was ignoring all those fundamentals as we had to deal with things like Ebola and other scandals that were hitting, and so the economy was being ignored by the market for a couple of weeks as the markets corrected sharply. Then at some point they stopped going down and the markets rallied very sharply again. So we not only didn't close down for the month, we closed up for the month. It was a very volatile month. Their earnings have been generally very good and the economy is still in growth mode, albeit tepid growth. We take that as a positive. While the economy is positive, yet there are still some ravages of the Great Recession still with us, where household income overall is not up. Households' incomes are up because there are many two-household income families now that weren't there before, as other folks have tried to go back to work. Yet at the same time, the labor force participation rate has gone way down. So fewer people are working than before, but yet some families are doubling up income, so the household income numbers look a little bit better. Historically, September was the worst month, and then we saw October being a very difficult month, and then it rallied to close. This is the 16th month in a row where the markets have generally been higher, the S&P 500. That is a record by 3 months. The last record was 13 in a row and in a segment during the 1990s. So what that means long term, we're not sure. Clearly the markets have been rallying most of the year and we're in positive territory. At one point though, we were down 7.7% in October and came rallying all the way back. Gold and commodities remain bearish. Oil prices are down and continue to go down. That could crimp oil companies' ability to hire. They may actually be shedding some costs in this environment because their cost of extracting oil is higher. Clearly they're not going to be getting as much in lower oil prices, so that becomes an issue. That could slow employment growth in the oil segment. We're generally entering the seasonal good period for the markets. After the summer, generally when the markets haven't performed as well, although this year they did reasonably well. And tomorrow, we're taping this on the 3rd of November. Tomorrow is the big election. So it looks as though the GOP might take the Senate. If they do, they probably won't have a veto-proof majority, so they'll still have to work with the president to try to get legislation passed. But there is a Republican trend here, and we'll see how they're going to be able to govern after that if that does come true. We may not even know the results of the final numbers in the Senate until sometime into December, as there's some other runoffs that are going to happen. But tomorrow is the big election, and we'll see how things finally shake out. So those are our comments for November. Thank you all very much.